All right, welcome back to this week's breakout watch list from December 27th to the 30th. Remember, the market is closed on Monday, so next week is going to be a shortened trading week, and it's going to be the last week of this terrible 2022 year. In this video, we'll be covering the top 10 swing trading setups from the long side. Each of these stocks either have strong fundamentals, strong technicals, or volume patterns that lead to uptrends. And this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. Here are the 10 setups that we'll be covering in today's video. I don't want to spend too much time here because we got a lot of stuff to go through. The first stock that we'll cover is ACLX. This is a biotech stock that caught my attention after it made new highs back in May or June, early parts of June. From there, it really took its time consolidating. That was a really big move from about $6.50 up to $26, so it makes sense to digest that move for such a long time. But from June up until really the beginning of December, consolidated there. We had a very large volume move, over 1,000% the average daily volume, as the stock broke out 29% on December 9th. We got continuation the next 3 days to the upside, and even as the market's been selling off, this has been just consolidating sideways above a rising 8-day EMA while volume tightens up. So very much a setup that we want to be looking for in any market, but especially one when the market's selling off and you see the stock trading sideways. It's a great sign of relative strength. What we're looking for here is just a break over Friday's high, 32.08 as a potential entry point, and a stop under the 8-day EMA. The next stock we have is the solar stock ARRY. I think this has been on the watch list a couple times before, but energy solar, fourth strongest group in the market out of 197, so A+ group strength rating there. B+ accumulation distribution, 98 overall composite with a 97 relative strength. Fundamentals have been accelerating the last 3 quarters. On earnings, went from -85, +50, +300. Sales accelerating from 19 to 116 to 173, and after-tax profit margins improving as well. So we have the fundamentals, we have the price action too. If I go to a weekly chart really quick, you can see a couple different patterns here. The inverse head and shoulder, where the left shoulder's low is above the right shoulder's low, which is exactly what you want to see. And you also see kind of a Minervini cup VCP pattern or cup and handle, where you have a pretty deep cup from 26 down to 6. Now that's way deeper than an ideal situation, but we have a secondary smaller cup here from 23.17 down to about $14. And then back on a daily chart, you can see here's the big cup, the smaller cup, and really tightening price action. It tried to break out on the, what day was this? The 14th of December, but market action sold off, so we don't expect the stock to hold up much better there. It did undercut the 8-day and the 21 EMA along with $20. Never came down to test the 50-day moving average, but the last 2 days we've seen a double inside candle, so price consolidating. Volume also is very light. Again, it was basically a holiday weekend last week as well. But with this, we're looking for a break over December 21st high of 21.63 for ARRY. Next, we have my favorite energy drink company, not a sponsored post. This is Celsius, CELH. This, similar to ARRY, had that larger cup, smaller cup, and then putting in a handle. But beverage non-alcoholic, 39th strongest group out of 197, so relatively strong there. Within the group of 20 stocks, it's second on relative strength rating, 8th overall composite. Just because this last quarter actually had negative earnings. Even though sales were up 98%, their profit margins were negative there. Overall, what I'm looking at here is just a pullback under the 8, the 21 EMAs. This is a stock that, on a weekly chart, you can see had a monster run, not energy drink pun there, but monster run up to $100, and then had this much deeper cup than ideal, down about 60%. And then that's why the next 2 kind of pullbacks, getting lighter and lighter, is exactly what we want to see. We want to see volatility contract there. And then on a, let's go to a 30-minute candle here. You can see potential downtrend line to trade the break of, got close to it on Friday, maybe even pushed it a little bit on Friday. But overall, just looking for a lower entry point on this one. That's the best way that I've found of trading Celsius this year. Always trying to buy it as it's coming through the 21 or 8-day EMA. So looking for a break over Friday's high, 106.92, call it 107 for Celsius. Next we have CROX. This was on the watch list last week, I believe, and acted perfectly. Last week it had a gap up when Nike reported earnings and they themselves gapped up. I think this was up about 3.5% when it opened, and then pushed right through 100, closed at the high of the day. Market had a rough day on Thursday, but this stock held the 8-day EMA and then closed right at the high of the day again, so only down 0.05%. And then on Friday, kind of similar action with the market, up about 0.5%, again closing at the high of the day. So this is a stock that's obviously being accumulated. We see very strong closing ranges compared to the S&P 500, compared to the NASDAQ, and actually holding up price-wise relative strength better as well. We're above the 8-day EMA, kind of finding support on any daily pullbacks to that, above the 21, above the 50, and the 200, all of which are in an uptrend and in the right order. So there is some overhead supply on this from 183 down to, what did it bottom at, 46. I wouldn't be looking for a trade all the way back up to all-time highs. Treat this more of a swing trade with expected overhead supply for CROX, CROX. The next stock is MANU. This is Manchester United. Right now, Leisure Services, 41st out of 197, so A- group strength rating there. This stock individually, you could see the price and volume pattern, up 14% one day, 25% one day, and up another 12% the next, all on well above average volume. This did have I like how this flag broke to the downside first to shake out the weaker hands, but when it did break to the downside, it held $20. So there was still a bid to support the price action and get it right back up to that area in a couple trading days, maybe a week or two, while the indexes were continuing to sell off. So a good sign of relative strength there over the last 2 weeks. And then Thursday, Friday, price consolidating, inside candles both days, and you also see volume tightening up. Again, that's with holiday volume. But with this price consolidation, we can get a low risk entry point where we can basically keep our stop at the low of the day on Friday, or the 8-day EMA right around $22. That's a little bit wider there, but still only 2% risk for MANU. Next stock we have is FUR. This is one that was on the watch list last week, one that I actually traded, but eventually took the trade off just because the market pressure was continuing to the downside. And I look foolish for taking it off because it held the pullback on Thursday, undercutting the 8-day EMA, but closing above it. And then on Friday was up 2%, closing right at the high of the day, which is ideal to see. But kind of walking through what we talked about last week, this is a stock that was in a downtrend and then rallied up to the 200-day moving average. After the second time that we didn't get clear action right at the 200-day, I was telling myself, just wait till we clear 51.40. We'll be above the 200-day. We'll get the moving averages in the right order. You can see we like uppercut it once, twice, 3 times, 4 times, 5 times, 6 times after that second one. So just something that you can go back, look at the price action around what you would expect a key moving average to be. And if it doesn't react well, then it's not something that you need to be focusing on. So I just wanted to clear over 51.42. We did that a couple weeks ago. And then as the market sold off over the last 2 weeks, it pulled into $50, held the low at $50, low of 50.06 on this day. Very tight closing ranges, all on less than average volume. Really holding up well while we were in a volatile market. So that was why it was on this watch list last week. It's acting very, very strong this week, so we'll keep it on just to break over Friday's high, 54.08 as a potential entry. Next stock we have is a biotech, HALO. Again, biotech's very strong group in the market, 30th out of 197 right now. This has a 93 overall composite rating, along with a 97 individual relative strength rating. Stock that has had a very nice move to the upside, went from 38 up to 59, so not quite 100%, but rough math, maybe 70, 80%. Then pulled back, undercut the 8-day EMA, hadn't even tested 55, the breakout point, or the 21 EMA. Then eventually did pull back with that second market wave to the downside, bounced right on the 21 EMA, and similar to the other stocks that we've been talking about, we saw price consolidation on Thursday and Friday on lighter than average volume, double inside candle here. So with this, looking for a break over Friday's high, 58.19 as a potential entry point. The next stock that we have is FUTU, and I want to start on a weekly chart with this one. This is a stock that has had a monster 2020 and 2021, went up to $200 and then crashed all the way down to $21. And with that 90% decline, you expect an extremely volatile stage 1 base, and that's what we got. From 21 rallied up to the eventual resistance to 57. That's about a double there. And then pulled back right down to 28. So it didn't undercut the previous low, which that would have been ideal for the setup, but nice big shakeout, very volatile base. And then eventually we break out over the 57.50 previous resistance. We do so on above average volume with accelerating earnings going from positive 31 to positive 35. And then the last 2 weeks as the market's been volatile and to the downside, this has pulled back a couple percent, but it's done so on below average volume, which is exactly what you want to see. I know the base is too deep for a lot of CanSlim purists to trade this, but we've pulled back to the 21 EMA. Volume continues to lighten up again with holiday volume, but on a 30-minute chart, you can see a nice downtrend line that got broke on Friday. So we're just looking for more confirmation in the upside and then take this with a break over Friday's high, 62.85 as your potential entry point. Last biotech stock that we'll talk about is RXDX. This is a stock that had a massive move up 165% on 1,200% the average daily volume. The one thing I didn't love about this day was it closed right near the low of the day, 5th percentile in the closing range, which isn't ideal. So usually I have these massive volume moves on my watch list when they close in the upper half of the daily range because it shows that demand is still persisting with the price action. But when we closed right near the low, I took it off my watch list for the next day, and I shouldn't have because it opened up into the wick above 100 and then held 100 on the pullback. Low of the day was 154 and then zipped out of there for a 22% gain. So missed that initial move up, not trying to chase it any higher here before some consolidation. But since then, we have had consolidation on this, pulling back to that 8-day EMA, couple daily shakeouts under what were like the previous lows in the flag, which I like the fact that we had a shakeout, but then we would still close back into that typical range there. It just shows that there's still someone buying it up. It's not absolutely flushing yet. And that could still happen, right? We don't know. But when we see tight price action after this type of price movement to the upside, we see the consolidation. We can get a low risk entry point, meaning we risk less than our potential gains. It doesn't mean that the stock has to break to the upside. But if we buy as momentum's coming towards our side, buying with a break over the high from Friday, 110.29, then we have the wind at our back, we have our tighter stop loss, and the upside is much higher. And that's trading with RXDX. The next stock that we'll cover is PDD. This is the second Chinese stock. I forgot to mention that FUTU is a Chinese name. I know some people don't trade Chinese stocks. I still do. I just tend to trade them with less position sizing just because there is additional overnight risk there. PDD, similar to FUTU, was a monster to trade in 2020, 2021, but also had a monster pullback, about 90% off the highs from $209, $210 down to $23. But another one that had multiple big shakeouts in the base, eventually did break into its stage 2 uptrend and did so on above average volume and accelerating earnings going from plus 157 to plus 256 year over year. Similar to FUTU, lower volume pullback the last 2 weeks and more, a little bit stronger than FUTU because it held the 21 EMA the entire time so far. So I really like how this base eventually played out, and we had that massive volume coming through as we broke to stage 2. So with this, we could go into a 30-minute chart. You could see the price contracting. I don't need to draw the lines for you guys, but you could see price contracting and pulling back on less than average volume. So we're just looking for a break over the high Friday, 85.41. That would also get us over the 8-day EMA as well. And that's going to be the breakout watch list for the upcoming shortened trading week. If you guys enjoyed the video, please do me a favor and leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. And a big thanks to MarketSmith for sponsoring this video. MarketSmith was the trading research platform that we were using to break down each of the setups. So if you liked what you see and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me throughout the trading week, you can follow me on the other social media sites. I'm at Nick Drendel at Twitter, and then at Nick_Drendel on everything else. Hope you guys have a great Christmas, and I'll see you guys in the next video.